Hey guys, what's up? Alec back with the daily stock market, and look at that. We've seen a pretty flat day in the stock market. NEO is the only standout stock, really up 2% on the day. However, if we scroll down, we can see that Coinbase down 11%, Enphase Energy down 4%, Shopify down 4%, and a lot of other stocks down. Tesla not really moving too much today, only down 2.8%. However, they were down to $107 per share, down 5.5% midday. So in this video, I want to jump into a few different options that we have out right now. QQQ put, we're up 93% over $230. We just took that out a few days ago, one day ago. We're already up $250 in a day. Now we also have an option spread taken out on Apple. We can see we're up 37% over $70. And if you're not the best option trader, if you want to learn some more strategies like spread options, for example, debit spreads, go ahead and message me here on Instagram. You can follow along with my exact trades. Now we also had a Tesla put that we took out up 74%. These are all wins for all of 2023. We are 6 for 6 on our option calls to start the new year off right. It's going to be a big new year, so you're definitely going to want to be along for the ride. Now let's talk a little bit about Coinbase because they're down 11% on the day, down to $33 per share, and they just shot up recently, up 12% at $38 per share. So can this be a swing trade? Is there some upward spike potential, some upward momentum? What we see here is a downward momentum overall. So there's a good chance we will see them below $32 per share once again. Okay, we have a market cap of 7.6 billion. So Coinbase is getting very attractive at this market cap valuation. If they go down to around $25 per share, I'm going to be a lot more interested in owning Coinbase. Now, obviously, Coinbase is an extremely risky stock. Okay, so that's the first thing you have to know about investing in something like Coinbase. But a good thing to know about Coinbase is they own around 10% of all of Bitcoin. They own around 2 million Bitcoins. Not only that, but they're one of the only public exchanges on the stock market. So remember what FTX did and the huge fallout that FTX did? It's because they're not a public company, so they don't have to release their balance sheets, their holdings, what they're investing in. They don't have to get audited. For example, Coinbase has to do all that stuff. So they're a lot more of a legit company. And if I had to guess, they're probably a brokerage that's going to be staying around for a long time. A lot of people say that Binance is their biggest rival. However, Binance is not a public company, so they could be doing all the same shady stuff that FTX is doing. However, Coinbase has to release all that stuff publicly, and they also have to get audited at the same time. And I think that Coinbase is here to stay for a while. The question is, what is Coinbase worth? Is the market cap worth only 7.6 billion? Is it worth double that, triple that, 5 times that? Well, I'll tell you right now, if you believe in Bitcoin and if you think that Bitcoin is going to go back to 60K or 100K or even higher, then there's a good idea to start dollar cost averaging into Coinbase in your portfolio. They're one of the only trustworthy brokerages left, and they're going to be making money off fees, off transaction fees, once more people are buying and purchasing and selling Bitcoin when it becomes popular once again. So right now, cryptocurrency is extremely not popular at all. That's why Coinbase is trading down 86% just in the last year. However, when cryptocurrency does become more popular again, there's a good chance we will see Coinbase at new all-time highs, which would be over 5 to 8x. We can see a 500% gain on something like Coinbase. Remember, this is very risky. It's not guaranteed. It's not financial advice, but these are just some possible things that could happen and some things I want you to at least start thinking about. Bitcoin could have a lot further down to still go, which means Coinbase could still have a lot further down to go also. We could possibly even see Coinbase around $10 per share. That's why I'm not loading the boat on Coinbase anytime soon. But I think dollar cost averaging in could prove beneficial, especially for extremely long-term holders. Now let's just go over a few exciting headlines. Here we see Delta T-Mobile to bring free Wi-Fi to flights in February. Ford is getting more electric vehicle sales. Ford rising electric vehicle sales contribute to bigger market share. So they're starting to see a bigger market share, which is a good thing for Ford investors. Walt Disney is reporting earnings next month. The Disney company executives to discuss first financial quarter of 2023 financial results via webcast. Mercedes to launch a new vehicle network charging station starting in North America to compete with Tesla. Mercedes-Benz is posed to invest billions of euros into building tens of thousands of fast charging points in North America, Europe, and China by 2023, the electric car maker said on Thursday. This article goes over why a bull call spread on Starbucks could be beneficial and uses less capital, obviously, if it is a spread. Starbucks found a support at its 10-week moving average line and its testing resistance at 105. Starbucks stock is also above 21, 50, and 200-day moving averages, unlike most of the indexes. One way to take on bullish exposure without risking too much capital is via a bull call spread. We did see a record on heavy discounts drive record U.S. online holiday spending. Shoppers spent a record of $211 billion online over the holiday season, which typically starts in November and ends in December, compared to earlier forecasts, which was only around 209 billion. We have rumors of Netflix losing one of its smash hits Wednesday to a streaming rival. Here's how it could happen. Okay, a second season hasn't been announced, and it could be due to a new ownership by MGM Studios. And we have reasons why Visa should deserve a spot on your watch list. It's common for many investors, especially those who are inexperienced, to buy shares in a company with a good story, even if those companies are losing or not making any money. Unfortunately, these high-risk investments often have little probability of ever paying off, and many investors pay the price and learn their lesson. A loss-making company is yet to prove itself with profit, and eventually the inflow of external capital may dry up. So even if this idea of high risk and high reward doesn't suit you, you might be more interested in a profitable growing company like Visa. Okay, now this is not to say the company presents the best investment opportunity around, but the profitability is a key component to success in business and success in the stock market, especially in the new year. Here we can actually see that we have Visa growing their EPS currently quarter over quarter as we speak. As we scroll down, we can also see their net income is growing, their total revenue is growing. If we pull out to an annual chart, we can also see that their total revenue is growing from 20 billion all the way to 29 billion in the last 5 years. Now, if we go over to the net income, we can also see that that has grown from 10 billion to 14 billion in the last 5 years, and their balance sheet has under 60% debt to asset ratio. So it's a little bit risky, but they know how to use their capital. They're a company that's been around for a while, so I wouldn't be too concerned about the balance sheet, more about that growth on their net income, and their growth on total revenue is more important. And what do analysts have to say about Visa? We see an 18% on average upside with around $250 per share price target in the next 12 months. Right now, we have Visa at $211 per share. So overall, does Visa deserve a spot on your watch list or your portfolio even? We can see at $175 per share, Visa is going to look a lot more attractive, and I think there's even a probability that we will see them under $175 per share. So personally, I'm going to be setting a price alert at $175 per share, and that doesn't mean I'm going to be buying at that price. That means that I'm probably going to start dollar cost averaging in slowly at that price, revisiting the stock, see if it's something I want to invest in, and it's probably going to be closer to $150 per share before I start loading the boat on something like Visa. We can even see that the PE ratio is 31, so they're a pretty good deal compared to the S&P 500 and compared to the market overall, especially given the moat that something like Visa has, okay, with a 31 P ratio is not bad. Market cap 430 billion, but I want to see that P ratio closer to 20 so I know that I'm getting a great deal on Visa. So thank you guys for all the continued love and support, not only on YouTube, but Instagram, also now 188,000 followers. Message me here on Instagram if you want to follow along with my trades. If you want to see the success stories, click on success number 7, click on success number 6. Go check them out for yourself. See the results that people have had. Now over 700 positive testimonials, over 2,000 people on the close friends list now. So what are you waiting for? Make 2023 your year of stock market success. Make sure you're subscribed with post notifications on so you don't miss any future uploads and you don't miss out on the next video because it's going to be a banger also. Don't forget to share this video with a friend, and remember, don't time the market, buy the market. Peace.